Datavault AI Inc., trading under the ticker DVLT, is currently sitting at exactly 1.48 USD, down 0.090 or 5.71% for the session so far. If you are watching this red candle form on your screen right now, your gut reaction is likely one of two things: panic that the AI microcap run is over, or frustration that you didn't wait just a few more hours to buy the dip. The chart is bleeding red, and the immediate sentiment across most investing sites and forums is that the hype cycle for smaller artificial intelligence names is cooling off. That is the expectation, that this 5.71% drop is a signal of weakness, a crack in the foundation, or a reason to rotate capital back into the safety of megacaps. But the reality is significantly more complex, and frankly, far more interesting. What you are witnessing right now isn't necessarily a fundamental collapse. It looks far more like a liquidity flush, a shakeout of weak hands before the market fully digests the implications of the company's pivot from a speculative tech play to a revenue-generating licensing engine. Most retail traders using a Robinhood app or scanning SoFi stocks see a percentage drop and assume sell, but the institutional tape tells a different story about volume absorption and support levels that are being tested right now. To understand why this minus 5.71% move is happening, we have to look beyond the headline number. Today's price action in Datavault AI Inc. is driven by a friction between short-term profit-taking and long-term valuation modeling. When you look at a stock like NVIDIA stock or Apple stock, you are accustomed to seeing movement based on macro trends or massive earnings beats. With DVLT, we are dealing with a different beast entirely, a high-beta, high-velocity asset that swings violently based on liquidity flows, rather than just simple PE ratios. The drop to $1.48 is testing a psychological support zone. Traders who entered during the massive run-up from the 52-week lows of roughly $0.25 are protecting gains, creating selling pressure that overwhelms the bid side on Interactive Brokers' trading platforms. However, the expectation is that this selling will spiral. The reality is that the volume profile suggests accumulation is happening beneath the surface. Smart money often waits for these red days to build positions without spiking the price, using the noise of a 5% drop to mask their entry. Let's break down the recent market movement in detail. The stock has been trading with elevated volatility, oscillating between the mid-$1.40s and high $1.60s. This 5.71% decline today comes on the back of a broader cooling in the speculative tech sector, but it is also specific to the digestion of recent corporate news. Datavault has been issuing a flurry of press releases, from licensing deals with the World Boxing Council to complex financing agreements with Silex Holding Company. The market is struggling to price these developments accurately. When a company announces a meme coin dividend, the Dreambold 2026 project, alongside serious institutional data monetization deals, it creates a schizophrenic valuation model. Investors using Schwab Intelligent Portfolios or seeking conservative investment help often shy away from this kind of complexity, leading to selling pressure. Conversely, active traders engaging in self-investing on platforms like Webull or Robinhood crypto accounts see the meme coin angle as a massive liquidity catalyst. This tug-of-war between serious fundamental growth, 148% revenue year over year, and speculative crypto-adjacent news is what is causing the price to chop and drop today. Furthermore, we must address the volume. Today's volume is significant, pushing past the 24 million mark, which indicates that this is not a quiet sell-off. A quiet drop on low volume is usually a sign of disinterest, A loud drop on high volume often indicates a battle for control. The bears are betting that the company's burn rate and the aggressive issuance of news are red flags. The bulls, likely operating through Fidelity brokerage accounts or specialized small cap funds, are betting that the raised revenue guidance, projecting over $200 million by 2026, is the only number that matters. When you see a stock down nearly 6% while simultaneously maintaining high turnover, it means that for every panicked seller, there is a buyer stepping in at $1.48, believing that this is the floor. It is a classic confrontation between technical breakdown and fundamental accumulation. Now, pause for a second. If you are currently holding DVLT or watching it on your watch list, I want you to engage with the community right now. Comment below how many shares of Datavault AI Inc. you currently hold and what your average entry price is. Are you underwater at $1.48, or are you still sitting on gains from the sub-$1 days? It is vital to see where the community stands to gauge the potential overhead supply. Let's shift gears to the company itself, because understanding the business model is the only way to separate the signal from the noise. Datavault AI Inc. is not just another AI wrapper company. Their business model is centered on the monetization of data, essentially turning data into a tradable asset class. They utilize a proprietary platform to ingest, process, and value data, making it usable for everything from advertising to predictive analytics. Unlike Tesla stock, which sells a physical product, cars and robots, or SoFi investing platforms that sell a service, Datavault sells the underlying utility of information. Their recent move to sign a licensing agreement with the World Boxing Council is a prime example of this. They're not just putting a logo on a boxing ring, they're aiming to monetize the data generated by the events, the athletes, and the fans. This is a high-margin approach if it works, as licensing revenue typically carries far fewer costs than manufacturing or hardware sales. However, the company is also deeply entrenched in the real-world asset (RWA) tokenization space. This is where the narrative gets tricky for traditional investors using Fidelity wealth management services. Datavault is positioning itself at the intersection of traditional tech and Web3, aiming to tokenize assets like mining claims, the deal with MTB Mining Ltd, and intellectual property. This makes the stock behave partly like a tech equity and partly like a crypto proxy. If you are familiar with Robinhood investments or interactive broker stock trading, you know that assets with crypto correlations tend to have extreme volatility. The company's decision to distribute a meme coin as a dividend to shareholders is a bold, unorthodox move designed to engage the retail base, the very people trading on Robinhood fractional shares or discussing stocks on Reddit. This strategy is either genius marketing that creates a loyal army of investors, or it is a distraction from core fundamentals. The market's reaction today, that 5.71% drop, suggests that for now, the distraction narrative might be winning the short-term argument. But here is the contrarian take that challenges that bearish view. The revenue growth is real. In their third quarter 2025 report, Datavault posted a 148% year-over-year revenue increase to $2.9 million. While $2.9 million might sound like pocket change compared to Apple stock or Nvidia stock, for a microcap, that rate of growth is explosive. More importantly, they raised their fiscal year 2025 guidance to a minimum of $30 million and their 2026 guidance to exceed $200 million. If they hit $200 million in revenue, the current market cap, floating around $450 million, would look remarkably cheap. Most software and AI companies trade at multiples of 10x, 15x, or even 20x revenue. If Datavault achieves its targets, we could be looking at a valuation gap that Fidelity ETFs and Fidelity mutual funds managers will eventually have to acknowledge. The drop to $1.48 today essentially ignores this guidance, pricing the stock as if the company will fail to execute. If you believe management can deliver, the disconnect between price, $1.48, and value, future revenue potential, is massive. This brings us to the broader landscape of online investment and self-investing. In the current market environment, retail traders have more power than ever before. Tools like Schwab Intelligent Portfolios or SoFi Robo-Advisor generally steer clients towards diversified, safe assets. This leaves the price discovery of stocks like DVLT almost entirely in the hands of active traders using Interactive Brokers platform or Fidelity trading tools to hunt for alpha.